We see that compliance and competitiveness at the forefront. Banks and financial services firms are continuing their efforts to adapt to an increasingly rigorous regulatory environment, and achieving greater efficiency and accuracy starts with sourcing high quality and transparent market data. This has been particularly important this past year with the impact of the pandemic, which exposed considerably the interconnected complexities between businesses, people, and the markets. In Asia, it challenged the rollout of financial regulations and exacerbated the differences of approach among individual jurisdictions as regulators work to harmonise local rules with global standards, such as Basel III, UMR uncleared margin rules, and IFRS accounting guidelines. It also amplified some of the vulnerabilities associated with Asian markets through increased volatility. We saw investors retreat from emerging markets, which strained liquidity and impacted local currencies. Without high quality and highly transparent market data, the ability to accurately identify, access, and validate inputs quickly, to value assets and portfolios, analyze trading books, and measure the impact of cross-border trading on pricing metrics can be very problematic. In addition to data information sourced via exchanges or sovereign debt instruments, firms are collating and integrating hard-to-find data and information, such as domestic ratings used to price localized markets against local corporate issuances, to supplement vendor proprietary models and reference points. Our world-leading CDS pricing service that provides deep credit spread information is an example of this, enabling our clients to analyze and value hard-to-price instruments at the issuer and portfolio levels. A second trend is operationalizing business value through more effective decision-making systems. The ability for firms to be able to easily access and manipulate generic and alternative granular data to validate investment recommendations or test scenarios is a key trend, particularly in the asset management space. With the exception of the tech sector, this past year has seen many investors struggle to generate adequate returns, drive alpha, and outperform benchmarks, especially in the fixed income universe. The financial environment, with its unprecedented volatility, triggered capital outflows from emerging markets, with governments keeping interest rates low in effort to stem impact economies. Hence, amidst declining fees, low returns, and intense competition, we're seeing asset managers realize that a focus on generic financial data is no longer enough to attract capital and generate alpha. The ability for firms to work with and integrate non-traditional data sets, research, and information to be able to look at companies, markets, and industries in entirely new ways is helping transform investment solutions and strategies to drive returns. In an example, our data is accompanied with industry analysis and thematic structured data solutions that cover macro insight, equity, sector, and trends across industries including climate and sustainability, maritime and trade, automotive, agribusiness, chemical, energy, just to name a few. These can be incorporated with a wide range of alternative criteria that include cybersecurity risks, ESG, environmental, social, and governance factors, geolocation, import-export data from bills of lading, ship movements, and a data lake of points that can be converted into meaningful commercial and financial insight. In this sense, market data solutions can enable firms to operationalize data and analytics to drive modern business value.